Welcome to this Quotex MACD masterclass. Before we start, please remember, trading is risky and we are not responsible for losses. This video is for educational purposes only. Now, let's dive in. In the next 5 minutes, I'm going to take you from a beginner to a pro with the moving average convergence divergence indicator. We'll cover every nuance of this powerful momentum tool on Quotex. The MACD was created by Gerald Appel in the late 1970s. For decades, it has been a staple for professional traders looking to identify new trends and momentum shifts in the market. On the Quotex platform, the MACD is a versatile oscillator. It helps traders visualize price action fluctuations and the underlying market volatility that drives every trade you make. The indicator is built from 3 distinct parts: the MACD line, the signal line, and the histogram. To use it correctly, you must understand how these 3 interact with each other. The blue line is the primary MACD line. It's calculated by subtracting the 26-period EMA from the 12-period EMA, representing the short-term relationship between 2 moving averages. The red line is your signal line. It's a 9-period EMA of the MACD line itself. This slower line acts as a trigger for your buy and sell signals, smoothing out the noise. Finally, the histogram shows the distance between the 2 lines. When the bars are growing, momentum is increasing. When they shrink, the current trend is likely losing its strength. A quick reminder as we move to strategy: trading is risky, and we are not responsible for losses. Always trade within your financial limits and never chase a market blindly. For Quotex trading, the default settings of 12, 26, and 9 are the industry standard. While experienced traders may tweak these, they offer the best balance for most market conditions. The most common strategy is the crossover. This is where the MACD line crosses over the signal line, indicating a potential reversal or a continuation of a trend. A bullish crossover occurs when the blue line crosses above the red line. This suggests that buyers are taking control, and it's a strong signal to consider a long or up trade. Conversely, a bearish crossover happens when the blue line drops below the red line. This indicates that sellers are gaining momentum, signaling a potential downward move. Patience is key. Never enter as soon as the lines touch. Wait for the current candle to close on your Quotex chart to confirm that the crossover is actually holding. The zero-line crossover is another powerful signal. It tells you when the 12-period EMA has crossed the 26-period EMA, confirming a longer-term trend shift. When the lines are above the zero level, the market is in a bullish zone. In this environment, focus your attention primarily on buy signals for higher probability trades. When the lines are below the zero level, you are in a bearish zone. Here, sell signals are generally more reliable as you are trading with the dominant market direction. Don't just look at the lines. The slope of the histogram bars can give you an early warning. If the bars are getting shorter, the current momentum is likely fading. When price is making new highs but the histogram bars are getting smaller, it's a sign that the trend is exhausted. Be very careful about entering new trades here. Divergence is an advanced technique. It occurs when the price moves in one direction, while the MACD indicator moves in the opposite, signaling a major reversal. Bullish divergence happens when price hits a lower low, but the MACD hits a higher low. This is a very strong indicator that a massive bullish bounce is imminent. Bearish divergence is the opposite. Price hits a higher high while the MACD hits a lower high. This is a signal to prepare for a potential downward move. To maximize your win rate, combine MACD with the RSI indicator. When both indicators provide a signal in the same direction, your probability of success is much higher. On Quotex, I recommend using the 1-minute and 5-minute timeframes. These allow you to capture momentum shifts quickly without getting trapped in long-term noise. Be cautious in sideways markets. The MACD thrives in trending conditions. In choppy markets, the lines will cross frequently, giving you too many false signals. Master your discipline and practice these setups on the Quotex demo account first. Master the strategy before risking real money. Remember, trading is risky. Ready to start trading? Join Quotex using the link in the description and get a 100% bonus on your first deposit today. Don't miss this offer. Thanks for watching this 5-minute masterclass. One final reminder: trading is risky and we are not responsible for losses. Trade smart and stay disciplined.